radio for a really great future. We're talking real money.
Well, the one thing about the future is it's unpredictable. We know that. We say it all the time, and yet I don't think most of us get it. I don't think we do. I think we think that we can predict the future because prophecy fulfillment, because we want to be able to do it. I don't know. Hi, everybody. Welcome to Talking Real Money. I'm Don McDonald. That's Tom Cock. We're here to do something really important. Make money make more sense and try to guide you into a slightly better path to a financial future that you're going to enjoy. Nudging and pushing and shoving and annoying a little bit maybe, but we mean well. So what am I talking about when I'm talking about prediction? Well, we could be talking about stock market predicting, which is usually always wrong. We could be talking about relationship predicting.
Wait a minute,
but it's
I was
money
right
show.
This year about stock market prediction.
So what? It doesn't mean anything.
I know, but I was at a holiday gathering and somebody said, you told me 6 months ago that you believed the tech stocks had this huge run and maybe they would slow down. I said, yeah, maybe. Okay. He goes, and you were right. The NASDAQ had a horrible
don't let
quarter.
it go to your head there,
so I'm
Kathy
ready.
Wood.
I'm ready to go. So, yeah, I'm ready to tell you what's
sometimes you get it right, but
I know, yeah.
What's the likely explanation for us getting it right when the future we know is unpredictable?
I believe it's luck.
There's
luck.
nothing else. No. There's nothing left. However, we continue to make predictions. Now, if you remember, a little over a year ago, we had a presidential election. Do you remember that?
Yes, I do. Kinda. Thank you.
Some of us, never mind. Shh, done. We knew at the time that if Donald J. Trump was elected president, he was going to invoke tariffs, which he did with a vengeance at the beginning of his term. And all the prognosticators said, including us, everybody, and we don't mean to prognosticate, sometimes we do, is that tariffs have to cause higher inflation. They have to. They're inflationary. By definition, they have to be inflationary. On the other side of the divide were the folks saying, well, manufacturing with these tariffs, U.S. manufacturing jobs are going to soar. All the work is going to come back to shore. How did those predictions turn out about a year later, Tom?
Yeah, it's a fascinating thing. And by the way, it falls into a couple of camps. I think we publicly said we don't favor tariffs as a policy. I don't. I'm a free trader. I think things get exchanged no matter what the government says. But the economists, and we'll get into some of the specifics, said, here's what would happen. And the president said, this is what will happen. You had these two camps. Fascinating. So the Wall Street Journal recently said, well, let's look at how the predictions were. Remember, the economic experts, they were not sold on when the president said the tariffs would revitalize American manufacturing, bring back middle-class jobs, and buoy the economy. Guess what? Both were wrong about the future because they don't know. The president said the markets are going to boom, stock market's going to boom. Now, he was kind of right about that because it was a great year for stocks in 2025. But let's look at some of the other places that were really more in focus. You mentioned employment. Well, Donald Trump said a 10% global tariff would add $2.8 million jobs. The Economist said, nah, tariffs are going to cause layoffs. And it's somewhere really in the middle, right? I mean, last fall, in September, the U.S. added 120,000 jobs. October lost 100,000. November up 64,000. I mean, and
so basically flat. Basically
flat. The unemployment rate, okay, because you're going to write me, as you always do. The unemployment rate has gone up a bit. It's at 4.5% basically, right? That's
right.
Still, from a historical standpoint, that's pretty
It's
low.
Hardly anything. It really is.
Yeah,
it's negligible. It's so close to not moving as to make it not worth mentioning.
Yeah, I mean, I think in the old days they might have even called it full employment, right? Because there's 2 or 3% of people that file every once in a while and then not really that interested in a job, but I got to file, et cetera, et cetera. So economists didn't rule out tariffs leading to more hiring down the road, but they did say that it was likely to cause a greater amount of unemployment, and that, frankly, has not come to pass. It just hasn't. So that has not been the case.
But how about the other side of the coin, inflation?
Yeah, well, glad you asked. The predictions, of course, the president said tariff costs will be borne by other countries, not the U.S. Economists, they said tariffs will push up inflation. And Trump and the economists largely missed the mark on inflation. That from the Wall Street Journal.
Wait, both sides missed
Both
the mark.
sides were wrong. That's right. What I find
so
fascinating.
again, on both points, both sides were wrong.
It's fascinating. The worst inflation fears have not come to pass. In fact, at the time of this recording, which is late 2025, the new numbers and inflation is still hovering a little less than 3%, which is historically, that's pretty low. I mean, I know the Fed wants 2%, but, I want to have chocolate cake every night and not
low.
Gain weight. But that's not going to happen.
Here's the reality that I find fascinating is that, and they were wrong about the consumer's going to pay it or the countries are going to pay it. They were wrong about that, too, because most of it ended up getting paid by the companies in the middle.
That's right.
They said, okay, we're
Yep.
gonna lower our margins a little bit to maintain sales, and that actually was pretty effective.
It was. And so the federal estimates, they still are saying, well, this will come to pass in the future. Higher prices at some point will come along. Well, they always come along.
Both sides are saying this will come to pass in the future. Takes a while for the manufacturing jobs to come. Takes a while for inflation to really kick in. So just give it enough time.
Yeah, you'll be right. But the point is, so far, both sides have been wrong. Then you had economic growth. Trump said a 10% global tariff will grow the economy by $728 billion. Meanwhile, the economist said, well, you're looking at a recession. There were many people starting the beginning part of last year thought, the U.S. is going to go into recession. But they missed one big part of the growth of the economy, growth of companies, and frankly, the growth of stock market returns. And that is that thing that you've fallen in love with, Don, AI, which has made companies apparently more efficient, has created more spending in this area, and to a large extent, people would say, and you don't know for sure, that's helped pushed stock prices up in 2025.
There can be no doubt that there was both a direct and an indirect effect from AI. The direct effect being all of that infrastructure that's being built, all of those chips that are being built, but the indirect effect has been one that anecdotally I've seen myself. I have improved my personal business productivity with the use of AI.
You sound better. Frankly, you even look better with AI, I think.
Exactly. The AI version of me looks so much better that maybe I'll even go video. I don't know.
Let's not get carried away. So again, we did not see a recession in 2025. That had been the prediction, if you remember, that this would push us over the edge. Then there's the aspect of revenue. The president saying we're going to bring in billions of dollars, even trillions. Economists say, not so fast. It'll take a while for that to kick in. And again, this is still somewhere in the middle. The collections have been better than the economists said, but not to the degree that the president had predicted. The two sides were far apart, and the reality is somewhere down the middle when it comes to tax collection.
This also points out another fact about predicting is that the shorter the horizon, the harder it is to call it, because there are macro trends that occur over and over. Like, for example, the thing that we say all the time, the stock market's more likely to go up than go down. So if you predict the stock market's going to go up, you're probably going to be right more than you're wrong, which means your predictions are going to be right more than they're wrong, because the stock market must rise more than it falls. Otherwise, eventually the economy goes to zero. That's just a fact. So macro predictions are not as hard as micro and short term. And so somebody could be right over the next 5 or 6 or 7 or 10 years, but we're not going to know for a while. And then once we know, it'll all be hindsight.
It won't matter because the market will reacted. Yeah, I mean, you asked about manufacturing. The president said we were going to supercharge our domestic industrial base. Economists said tariffs alone can't revive manufacturing. And frankly, this is one area where U.S. factory activity has actually contracted for 9 months. but not to the degree that the economists believed that it would, not as bad as they said it was going to be. So I think they were right in saying one thing will not fix manufacturing. As you said, Don, all the jobs won't return to our shores, but not as much as people had thought would be the case. That's the reality. Again, somewhere between what one side said and what the other side predicted, all these predictions. It's fascinating to me.
Well, it just goes back to a basic tenet of life that I have developed over the many years I've been on this planet now, and that is, generally speaking, this is a truism, I think, more often than not. The truth in almost everything lies between the extremes. It's somewhere in the middle. There's no black, there's no white. There are just various shades of gray.
I think that's absolutely 100% true. Here's the other part of that I find fascinating about all this. You started the program and talked about how we want to find somebody who can predict the future. It gives us a sense of control. It gives us a sense of like, well, I'll just follow that person. And the reality is so far from that. So when I read this piece, I thought, wow, what do we really know about what's going to happen 5 minutes from now? Because as our friend John Bogle once said, nobody knows nothing, right? I mean, isn't that what he said? Something like that?
Nobody knows nothing about the future. The three N's.
Yeah, the Lao Tzu, I think I have that right, the Chinese. He said, those who have knowledge don't predict. Those who predict don't have knowledge. I really like that one. And then there's, of course, the always famous, important, I think he was just a baseball player. He said, it's tough to make predictions, especially about the future. That was Yogi Berra. Of course, that was a Berraism, so a Yogiism or whatever. I apologize to you Yankee fans.
Hey, boo-boo.
Hey, boo-boo.
Oh, so not that Yogi. Oh, sorry.
But here's the thing. I mentioned this party where somebody said you were right. By the way, somebody else chimed in and said, wait. I talked to him in like February, me being him, about investing in gold, and he told me not to do it. And gold made like 60% this year. So I didn't know. But I don't believe in gold as an investment either. I think it's a speculative play. But I was wrong about that. I guess I was right about tech. But the thing is about any of these predictions.
Wait a minute. Your truth was somewhere in the middle?
Exactly. Down the middle. The truth is, this is why when you're building your portfolio, you're not listening to ideas. You're not listening to predictions. You're not listening to people you believe you should trust about this, because these are the smart people and they don't know. The economists look at this every single day, focus in on this, and they can't tell you what's going to happen in the next few months or year ahead. So you build the right portfolio. You don't mess around with it. You rebalance it when necessary, and you should probably be doing that right now as we're in to start a new year. And then you got to stand back and let it ride and not pay attention to all those prognosticators, right, Don?
You know, although I gotta amend your statement a little bit. We know that there are no experts who know the future. I don't think that for most of our listeners that's the big problem. I don't really believe they believe that there are experts who can predict the future. However, there is one person that they do tend to continue to believe knows something about the future that they don't know, and that is themselves.
Oh, I think that's totally true.
We tend to have a very high opinion of our opinion and our abilities, and we think we know. Well, I hear it all the time. Come on, the market's going to crash. You know it's going to. Someday, but I don't know when, and I don't know how bad, and I don't know how long it will last. I know none of those things, so that means I have no actionable intelligence. I don't know. And yet, I hear it all the time. Come on. Just look at what's going on.
It's easy.
You know the market's going to crash.
It's got to go here. Yeah, I mean, right. I know I'm always right. That's because I'm a high school soccer referee, and I've been told I'm right for 30-plus years, right? So,
by whom? Certainly not the
players.
By
all the participants, yeah. So I get that.
Were you listening to the crowd?
No, I never listened.
Did you?
I don't weigh in on what
kill
they
the ref? I don't think that means kill the ref, because he was so accurate in his calls.
That
we don't want to. We want to preserve him at this peak of efficiency. And we don't want him to go forward and make a bad call. So let's kill him now. Kill the ref.
Get it over with. All right. Fair enough. We got time for a couple questions. Couple of questions. Fire in here.
Well, let's see. Since it's 14 minutes into the podcast, yes, we have about 14 minutes.
This comes from Dubuque, Iowa. It's Jim. Hi, Jim. He says,
Sounds like a cold place this time of year, doesn't it?
Oh, the upper Midwest. My 16-year-old son showed interest in investing. The money he makes is in cash. What accounts would you recommend? I assume not Roth IRA without taxable income. Now, Jim, you mentioned the money he makes, so I thought that sounded like employment to me. Because if he made money, then that is taxable income. If he was given the money or raised it by some other means, which I don't know, then you're right. He could not create, for a Roth IRA, you have to have income.
Right.
Got to have income.
You can get the same effect, or a very similar effect. It just won't be tax-free for life, but you can get some tax deferral by using an aggressive growth-oriented ETF in just a regular old brokerage account.
But I think he's asking about what type of account should be open for him.
Well, then it would be, if he has earned income, a Roth. If he doesn't have earned income, a regular brokerage account.
It doesn't have to be one of the Uniform Gift of Minors Act or one of that sort of thing because he's 16.
Oh, yeah, it would have to be under a parent's custodyship.
I think that's what he's asking.
Yeah,
which one of those would you recommend then at that point? Uniform Gift of Minor. I mean, which of those type of accounts would you suggest at that point?
The Roth or the UGMA?
UGMA is what I'm saying. That's the one. If it's not a Roth,
well,
it's
it depends
UGMA.
on the state you're in. It's either a UTMA or a UGMA.
Okay, that's what I was trying to get to.
Yeah.
So,
Yeah.
But then it'd be easy for me. Then I would use one of the one fund solutions that we offer. Can we say Avantis?
Depends on. No, we can't say it again. We said it. That was our number one word of 2025.
That is shocking. Still,
I know that was our number one word. Riverside, the people we record these through, so that Tom and I can pretend we're in the same place at the same time. They actually counted the number of words we said, all of them, and came up with our number one word for 2025, which was
Avantis. Yeah, that's still shocking to me.
All right, Avantis, you owe us big time.
Big.
Apparently, we gave you a much bigger plug than we thought we were giving you for that absolutely nothing you give us in return.
We get nothing from Avantis.
I'm thinking there's a quid pro quo missing.
Yeah, big time. So, either
I didn't even get a Christmas
gift
from Avantis.
No, I don't think I even got a card. So,
boy.
Or a Roth IRA if he has
I'm
income.
Changing my
Roth
number
IRA.
one word to Vanguard.
Exactly.
See, I'll show you.
What about dimensional? Yeah, there you go. And then one fund, and you could use either the dimensional. Did I say dimensional?
Yeah,
DFAW, which is a global stock fund, or the Avantis AVGE, which is the global stock fund from Avantis. 100% stocks. All right. Let's go to the next question, assuming I can find it here. Oh, here it is. This comes from Pete in Mooresville, North Carolina. Hi, Don and Tom. I'm 70. Listening to one of your podcasts today. Don mentioned that a, quote, Roth is a Roth. And once it's opened, you had a 5-year waiting period for all deposits, including subsequent conversions. I believe each conversion starts its own 5-year clock. Am I correct? I don't want to get a nasty gram from the IRS. Yes is the answer to that. In other words, if you convert a certain amount of money this year from your IRA, your individual retirement account, to your Roth, that begins a 5-year clock on that particular conversion.
Yeah, if I alluded to that, I miss.
No, you were right about it, I think. Yeah.
Okay, all right.
Yeah, it sounded like you're right. So,
okay,
but you're yes, Pete, you're right, because once that goes in, then it has to have the 5-year wait. In other words, anytime you put money in a Roth,
it
you
needs
wait
to
5
sit
years
there
to
for
take
5 years.
Yeah, exactly. They don't want you just putting it in.
Yeah, it's not
it
5 years from the very first thing, and then you never have a 5-year again. And
exactly. Now, my
if anybody
question,
got that, I didn't mean that.
Yeah, and my question to the Internal Revenue Service, should you be monitoring this broadcast, is: do you really keep track of all this? I gotta wonder, but okay. So I doubt it, but who knows? Do it right.
Well, no.
No.
See, they don't keep track of necessarily of everything. They do get reports back, but I don't know that they're being actively monitored. They're probably being monitored by a computer, but their computer systems are ancient. But the reality is,
somewhere,
if you get audited.
Yeah, then you may have to go back and show them the trail of all that. Yeah, that makes sense. So
that's generally the enforcement tool that's used.
0.0 0.003% of the population that's now audited or whatever. And I probably shouldn't pick on them because they're going to look at my taxes next.
There are only 6 people left at the IRS doing audits.
That's about it. That's not even funny, and we're going to get nastygram for that. We get nastygram for
we do. And by the way, guys,
don't
folks,
just leave it.
No. I'm not going to give any specifics, but
all right.
Can we get our little sense of humor back?
No.
I mean, really,
States.
we have kidded about some things, and we have gotten some nasty emails because we were considered to be thoughtless or mean mocking or joking around, folks.
Yeah. I was making fun of myself on something, and they got mad at me for that.
Right.
I was laughing at myself. Okay. Fair enough. I know America's very
I made fun of old
days.
people on a calendar. I said, and because nobody wants to look at me naked. What? I'm body shaming myself.
I said I need to hide behind the arena. Something large.
Come on.
Anyway, I know, but
lighten up, folks. We really have. It's a totally different topic. We really have become too serious in this country.
Way too. So
we take everything too seriously.
Couldn't agree more. By the way, speaking of serious, you really want to know about your retirement?
Oh, this only works for people in the Seattle area. No, they can watch
online.
it
online. RetireMeet coming up in March. You can go to retiremeet.com. Special pricing for tickets if you want to join us in Seattle. We'd love that. Moved to March because of the nice weather then in March, right? Always in Seattle.
Oh, it's so much better in March than February.
The sun's up like 3 hours then. Anyway, so March 7th, Seattle, at Bellevue, actually. But online, so join us for RetireMeet 2026. I'll be there.
RetireMeet.com.
And we have a very special guest from Morningstar. Very special guest from Morningstar. That was my throw to you.
Oh, am I supposed to mention Christine Benz?
I was waiting, but
Okay, Christine Benz is going to be there.
I know, so it's a special guest. So yeah, so join us.
Don's going to be there. Tom's going to be there.
Yep,
I'm doing retirement evolution.
I love it. Yeah.
Anyway,
what was it? From nothing to something, or from zero to hero, or
no, from none to fun.
That's it.
Used to be there was no retirement. Now it's like, I'm going to have a great time.
Yeah,
I'm working my whole life to retire and have fun.
Yeah, which I don't recommend. I think you should have some fun before you get to retirement because you never know how long you got once you
really
do retire.
Follow Tom's example. Look at his vacations, one of which he just got back from.
I know. It's horrible. So anyway, thank you all for that. That's it. That's all I got.
I'm trying to do the time shifting. If you want to ask us questions, go to talkingrealmoney.com and send us a question on the contact form. You can speak those or you can write those. And we are also part of a company called Apella Wealth. It used to be Vestry, and then it merged with Apella Wealth. And our philosophy has always been every single person deserves some help with their portfolio, with their investments, with their money. And you don't have to have $1 million to get some free help. We'll help anybody, anywhere, anytime with no cost, no obligation. And get this part, we are not going to put you in a headlock and say, now become a client. We don't do that.
No, I punch. I don't do headlocks. It's a light hit on the chin. Ooh, I hope that's not going to get a nasty gram too.
Stop using the little electrodes in the chair.
I lost them in 2025. I got to find them.
Actually, what he's doing now is he's hired a hypnotist that sits in the back of the room. And when I count to 3, you'll become an Apella client. 1, 2, 3. I wonder if that worked. Did everybody just become an Apella client? If so, I can retire now.
You can retire now. And I think you should, frankly.
And go have fun.
Your work. Exactly. So see ya.
All right, we're done. Thanks so much for being a part of our little podcast. Tell a friend or two, or 1,000. Do you have 1,000 friends? I don't. Probably.
I know only one person who does. Your wife has 1,000 friends.
Yeah, she does, man.
Makes friends everywhere. So
Anyway, thanks for being there. We really, truly appreciate you. And what's the number one word on Talking Real Money? Avantis.
Avantis.
Avantis. Avantis. Avantis. Avantis. Avantis. Avantis. Avantis.
Avantis.
Avantis.
Avantis. Avantis. Avantis. Avantis. Avantis. Avantis. Avantis.
Avantis.
The opinions and views expressed on this podcast were current on the date recorded.
Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Apella Wealth. The views and strategies described may not be suitable for everyone.
This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction.
Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Apella Wealth, a fee-only registered investment advisor.
Please see Apella Wealth's ADV Part 2A on our website for information regarding Apella's fees and services.
Apella Capital, LLC, DBA Apella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Apella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. And the lawyers get richer.